here's what's important. Look at this point of view. What would help the markets into the end of the year? What factors would move things forward? So there's three things that matter, and three things we've been hitting on for the last month here. Number one would be some indication the Fed is not as on aggressive a rate hike path as some traders feared. Not one in December and 3 or 4 next year, something less than that. But it's really hard for them now. 3.1% wage growth annually. They're in a tight bind right now. They cannot not hike. They've got to go ahead with this right now. So the Fed's boxed in right now. So there's one avenue for help for the stock market that's kind of out of it. So if you're a bull, what else is left? There's two other things. Number one, let's get some better global growth. How about that? That would help. But we're not getting a lot of help. You've seen the data you've been reporting all week from Europe, the PMI numbers, from China, the PMI numbers. We're not getting a lot of help from Europe and China on the global growth story. What else is left? Well, it's the trade breakthrough. That's the wild card. And did you see what happened at 1:50 a.m.? The futures exploded on that Bloomberg report that maybe the president was asking people. Look, take a look at this. Nothing is happening at 2 a.m. There's nothing open. Nothing, and the world blows up. I go up, I come in the morning at 5 a.m. I look, what the heck happened? No, that's the trade. That's the marginal mover of the market. And there, by the way, on the far right, Amen. That's our Amen Javers came out. And look, it's been slow descent downward from there. So that's the marginal mover of the market right now. That's the wild card that nobody can get their hands around.
I want to tease this out for a second, because it sounds like what you're arguing right now is why we've gone lower in markets in the last hour or so is not necessarily because of Apple, but because of the jobs report and also China trade.
Those are the two most important mover in the markets. Third would be the global growth story. I don't think we got a lot of news today on the global growth story. It'd be great if the China numbers picked up. I mean, they're economic numbers, not the trade negotiation numbers, picked up a little. That would be a lot of help to the market. That's not happening though. So we got to deal with the cards we've got. You see the cards. It's the trade that's moving it right now, and the fact that the Fed is boxed.
Although all week long you've been hitting buybacks, right?
Yeah, buybacks have been stupendous, and I'm waiting for the final numbers on Apple. We'll get the 10Q out a little later on. I believe Apple bought back close to $20 billion in stock this quarter. 19 is probably a more accurate number, as well as $4 billion in dividends that they handed out. So Apple is going to have $62 billion in buybacks this year. That's a remarkable number. By the end of the year, they'll probably have $82 billion in buybacks. To give you some sense of what that's 8 to 10% of all the buybacks that will actually occur, not announce, actually occur, is Apple. They are really phenomenal. And the important thing is those buybacks, the corporate buyers are the nominal buyers of the market. They are the most important thing in the market in the last 5 or 6 years. Even more important than ETF inflows, we keep talking about that. A lot of those inflows come because people are taking money out of mutual funds and putting them in ETFs. So be careful about those flows. It's not necessarily new money. Corporate buying, though, has been really important. And I guarantee you, the market would be lower if we had no corporate buybacks in the last 5 years. I don't know how much, but it would definitely be lower than it is now.
When you say marginal buyer, that's what you mean. Exactly.
They're the people coming in every day that are making a real difference in the market.
And you've been one of the first to report on this. Should we be talking more about midterms? Do you think that's going to move markets next week?
You know, I've been watching all sorts of notes, people saying we're concerned when the Democrats take the House. That's the consensus right now. And I keep saying, how is this going to imperil the tax cuts, which is the main thing? And the bulls keep arguing, we're worried because they want to make the tax cuts permanent, and that may imperil that. I would agree on that, but I can't imagine any situation where the Democrats suddenly are going to reverse any of the economic changes that we have seen, unless, of course, the Senate flips to the Republicans. I don't buy that particular story, but the nervousness is out there, so it's a little bit of chatter. I think the Trump-Xi meeting far and away is more important on November 30th.